Welcome to The Explainer. Let's jump right in. Imagine waking up, grabbing your morning coffee, and checking your phone, only to see that while you were fast asleep, money just quietly flowed into your account. No boss breathing down your neck, no alarms, no frantic stock trading, just consistent, reliable growth humming along in the background of your life.
Now, before you roll your eyes, hear me out. This isn't some fantasy, and it's definitely not a get-rich-quick scheme. This is literally just how the wealthiest people think about money. So today, we're taking 10 of the smartest 2026 investments and organizing them into a simple step-by-step wealth ladder perfectly designed for total beginners.
Here's the game plan. We've got Step 1, Zero Risk Foundations. Step 2, the Market Baskets. Step 3, Passive Income Streams. And finally, Step 4, the Ultimate Asset.
All right, starting right at the bottom. Step 1, Zero Risk Foundations. We always start with the low-risk options first.
Look, when you're just starting out, the goal isn't gambling on wild bets. You just want to protect your cash. The absolute simplest thing you can do right now is move your money into a high-yield savings account. A traditional bank gives you what? A microscopic 0.01%? But right now, in 2026, high-yield accounts are paying around 5% annually. So if you park a $10,000 emergency fund there, you're looking at an easy $400 to $500 a year. Completely risk-free, zero market volatility.
Moving just a tiny bit up that risk-free ladder, we hit bonds. Buying a bond basically means you're lending your cash to a government or a massive corporation. They promise to pay you a fixed interest rate for a while, and then boom, you get your original money back. Think of them as your financial shock absorbers. They aren't going to skyrocket like stocks, but when the market takes a dive, bonds hold their ground and keep you safe.
And the numbers right now, absolutely fantastic. U.S. Treasury bonds, which by the way are considered one of the safest investments on the entire planet, are offering around 4 to 5% a year. Think about that for a second. It's essentially free money from the government for doing pretty much nothing but letting your cash sit safely.
Rounding out our zero-risk foundation is gold. For literally thousands of years, this has been the ultimate store of value. When economies get a bit shaky or inflation creeps up and currencies lose their punch, gold just holds its ground. And no, you don't need to go bury physical gold bars in your backyard. You can easily invest digitally or through the stock market. Putting just 5 to 10% of your portfolio here is incredibly powerful protection against an unpredictable world.
Okay, let's step up to Step 2, the market baskets.
Now that our low-risk foundation is rock solid, we can start letting the broader stock market do the heavy lifting for us. Enter the index fund. Instead of trying to guess which single company is going to win, an index fund is just a big basket holding tiny pieces of hundreds or even thousands of companies all at once. Take the S&P 500. It tracks the 500 largest U.S. companies and historically averages around a 10% return every year. That means if you dropped 10 grand in there today, it could grow to over $170,000 in 30 years, with literally zero ongoing effort.
If that sounds almost too simple to be true, take it from Warren Buffett, arguably the greatest investor ever. He explicitly says that for most ordinary people, a simple, low-cost index fund is the smartest investment they can make. Honestly, if the ultimate financial heavyweight champions this super simple strategy, beginners can feel totally confident relying on it. Now, closely related to the index fund is the ETF, or Exchange Traded Fund. While index funds are amazing for broad, steady, long-term holding, ETFs are kind of like their upgraded, slightly more agile cousin. You can buy and sell them throughout the day just like regular stocks. Plus, right now there are ETFs for highly specific sectors. Want to invest in clean energy, global markets, healthcare? There's a low-fee ETF for exactly that. It's highly targeted diversification made super simple.
Moving right along to Step 3, Passive Income Streams.
This is where things get really fun. At this level, your investments cross this magical threshold where they start physically paying you recurring cash. First up, dividend stocks. When you buy shares in really robust companies, think heavyweights like J&J, Coca-Cola, Procter & Gamble, they actually share a cut of their profits with you every single quarter. They've been paying these out consistently through recessions, pandemics, you name it. A solid $20,000 portfolio here can generate $600 to $1,400 a year in pure passive cash. And the real secret? Reinvest those dividends and let compound growth do all the heavy lifting.
Next up in passive income is real estate. But hey, before you tell me you don't have hundreds of thousands lying around for a down payment, let's talk about REITs, real estate investment trusts.
This brilliant little tool lets you invest in real estate right through the stock market with as little as $100. You get all those amazing wealth-building benefits of rental income, completely skipping the massive upfront costs and the absolute nightmare of being a landlord fixing leaky toilets at 2 in the morning.
And the most crucial thing to know about REITs is this magic number, 90%. By law, these trusts are required to distribute at least 90% of their taxable income right back to you as dividends. That guarantees a highly consistent, super reliable stream of passive income flowing straight to your bank account, all while the underlying real estate values keep growing.
Finally, we reach the top. Step 4, the ultimate asset.
So, you've protected your cash, you've grown it in the market, you've got passive income flowing. But the most powerful, and honestly the most overlooked asset in this entire plan isn't a stock or a bond. It's you. Seriously, treat your brain like an asset. In 2026, the people making the most are the ones with the most valuable skills. Investing in yourself has absolutely massive asymmetric returns. Dropping $200 on a course to learn coding, digital marketing, financial analysis, or video editing can easily bring in an extra $1,000 a month in freelance work or land you a promotion. That kind of ROI completely destroys any stock market average.
And once you've got those high-value skills, you can leverage them straight into digital products. This market has just exploded. We're talking ebooks, online courses, templates, preset packs. The absolute beauty of this is you spend the time creating it exactly once, and you can sell it forever. Zero physical inventory, no shipping delays, basically zero overhead. This is the literal modern definition of making money while you sleep.
And all of that comes together for our 10th and final investment on the ladder. Building your own business or side income. It's a really simple flow. Build a high-value skill, package it into a digital product or service, launch your side income. Look, relying solely on a traditional job means you have one massive single point of failure. If that job vanishes tomorrow, your income drops to zero. Building your own stream completely removes that risk and creates an asset that belongs 100% to you.
Now, I know looking at all 4 steps of this wealth ladder might feel like a lot to take in at once. But here is the single most important takeaway from this entire explainer. You don't need to master all 10 of these investments today. You literally just need to pick one. Whether that's moving your emergency fund to a 5% high-yield account, buying your very first index fund, or just spending a weekend learning a new skill. Taking the smallest step forward on this ladder is infinitely better than standing perfectly still.
So I'm going to leave you with one final provocative question to think about. Which step are you going to take right now? The people who will actually achieve total financial freedom by 2030 are the ones deciding to climb that very first rung today. Thanks so much for hanging out with me for this explainer, and I really hope you feel totally empowered to start building your own wealth ladder today.